Hello and welcome. I'm Joyce Blonsky and your host of Brilliance by Blonsky. I'm very excited to share with you a series of 4 interviews I did with Joseph Meyer. These are at the center of all of our conversations today. Our interviews go from finding good paying jobs and how employers can find the best talent, or whether or not now is the right time to get into a new home or just sit tight. We're going to talk about the rising costs of caring for your elderly parents, commercial real estate, and a bunch of other things regarding real estate. We're also going to talk about how much it costs to fill up your gas tank and how much more or less it could down the road. We're going to look at how cloud computing and cloud companies can actually reduce your bill when it comes to the gas pump. And lastly, we're going to take a look at the stock market, and Joseph will weigh in on his outlook on where you should be invested right now. Let me take just a moment to read to you a disclosure and a quick little bio for Joseph Meyer, and we'll get started. Securities offered through Cambridge Investment Research, Inc., a broker-dealer member, FINRA SIPC. Investment advisor representative, Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Blonsky Financial Services are not affiliated. In today's volatile investment community, we all need to be confident of obtaining the most accurate information possible in order to make some very critical financial decisions. We find this valuable information by locating the most experienced individuals in their particular field of expertise. In the field of financial services, there are few who can compare with the level of professional experience and expertise of Joseph Meyer. For nearly 4 decades, he's been personally and professionally involved with the U.S. financial industry. He has literally helped thousands of people find their way through the maze of questions that can arise in an ever-changing financial environment. Meyer has seen good markets turn bad and then turn back up towards prosperity again. Joseph Meyer has the answers that only experienced and common sense can provide. Mr. Meyer has entered the brokerage industry back in the early 1970s as a broker-dealer trainee with the firm of Edwards and Hanley, a member of the New York Stock Exchange. He was employed by a number of top New York Stock Exchange firms as a registered representative, including Edwards and Hanley, Merrill Lynch, Shearson, Hayden Stone, Inc., and Payne Weber, Jackson and Curtis. Meyer has also been a professional insurance agent and a licensed in health, life, disability, annuity coverage with Bankers Life and Casualty Company. He became a self-employed stock market strategist and professional equity trader and went on to become a registered investment advisor. In 1989, Meyer developed his management consulting firm, Myers & Associates, to help with the disposition of non-performing structured assets. Meyer is an industry arbitrator with the National Association of Security Dealers and the New York Stock Exchange. I am so pleased to be able to bring Mr. Meyer to our audience today as we discuss a number of wonderful topics in a series of 4 interviews, from jobs to homes to gas and, of course, the stock market. So please join me in welcoming Mr. Meyer. You're listening to part 3 of our 4-part series, and this is a killer for all of us. Gasoline. Gasoline and how much it's costing us out of our pockets every time we turn into a gas station. We're going to look at where gas prices are going, where they are globally, and how, believe it or not, cloud computing in the cloud can reduce your gasoline bill. So here we go with another wonderful interview with myself and Joseph Meyer. I wanted to touch on another major issue, and that is gasoline prices. I know you have written some really great stuff in your Straight Money Analysis, your April newsletter. And one of the things that really just shocked me was how much Germany is paying for a gallon of gas and how much the Venezuelans are paying for a gallon of gas. It is an amazing discrepancy. And then, of course, I was telling you earlier that my head nearly exploded last week when I had to fill up my car, and it was $61.38, and I'm still bitching about the fact that it was $61. I kept thinking, is that ever going to stop racking up the dollars? And I only have a 15-gallon tank, so you can do the math and know it was almost $4.10 a gallon, and it just blows my mind. So do you think we'll ever get down to $2 for a gallon of gas?
I think the days of cheap energy are long behind us, and I've spoken to this point many times in the newsletter. I think when you talk about the 5 times previously when oil prices have doubled within a 2-year time frame, we had it first January 1974, again November 1979, again September 1990, again June 2000, again August 2005. And now if we see a doubling from here, which is a good possibility we will, December 2010. But I think when you take a look at the amount of oil being consumed globally, and as you know, China's economy and India's economy continues to grow and continues to grow very aggressively. So taking that into account with my belief that we're past peak oil, I think peak oil, as we talk about worldwide production, took place in 2005. And I think when you take a look at the major fields that are still pumping oil and certainly pumping at levels far below what they once did, I think when you talk about the aging Saudi oil fields, they were discovered in the 1930s. I think when you talk about the other major field, Canarell in Mexico, which was producing since the late 1980s, these fields are greatly depleted, and the production levels now are starting to fall and fall very rapidly. So I think the point where the Saudis can always continue to pump oil, certainly when the markets dictate that they do that, is becoming more difficult for them to do. But I think when you look at the previous oil energy shocks to the world economies, we've had 6 prior shocks which have driven prices and driven them to levels that certainly brought a lot of pain to the economy, and I'll name them quickly for you. In the 50s, you had the Suez Canal crisis. In the mid-60s, you had the 6-day Arab-Israeli war. In the early 70s, you had the Yom Kippur War and Arab oil embargo. In the late 70s, you had the Iranian Revolution. In the early 80s, you had the Iraq-Iran war. And currently now, you have Iran-Israel nuclear weapons development program. Starting date of this conflict, as of now, Joyce, is unknown. But to get back to your other point, when you talk about worldwide gasoline prices, I mean, you've got a gallon of gas in Germany selling for $11.49 a gallon. You've got it selling in France for $9.66 a gallon. You have it selling in Brazil for $5.67 per gallon. You have it here in the U.S., $3.96 per gallon. And you have it as cheap as 12 cents per gallon in Venezuela.
Yeah, well, it was interesting in reading your newspaper, the Chinese gas per gallon is not even $3. So they're getting a deal.
China is currently paying approximately $2.91 per gallon.
Yeah.
But more importantly, what people lose sight of is every dollar a barrel we see increase in the price of crude oil, it adds 3.2 cents to the price of a gallon of gasoline. More importantly, every $30 a barrel increase we see in the price of crude oil is $1 to the gallon price of pump gasoline.
One of the things that I look at kind of in my crystal ball, if you will, and I actually wrote about it in On the Clouds, was a lot of companies are now having you work from home.
Yes.
And it actually reduces our carbon footprint because we have fewer cars on the road. It keeps more money in your pocket because obviously you're not having to pay for gas to commute. You're also not, if you're in a big city, not having to pay for parking because that can be exorbitant as well. They don't have to pay for office space. It shrinks their square footage. And I actually see that being more prevalent, especially with Skype and the worldwide internet. We basically can have multiple people on conference calls and collaborating no matter where they are, whether they're in China, India, or they're all located in the same town. So I actually see, I would agree with you that $2 gallon of gas is just kind of like a wantful, lovely, not going to ever happen wish. But at the same time, as gas prices do increase and you hear the screams at the pump, like when I pumped my gas, I believe you're going to see more and more businesses opting for employees that work out of their homes.
Oh, I agree wholeheartedly. I think to put in perspective, what is happening certainly with crude oil and more importantly what we're seeing in the natural gas complex as well, people lose sight of the fact that going back in the early 1970s, a barrel of oil was roughly $4 and a gallon of gasoline was roughly 29-30 cents a gallon. And what had happened when Iran wanted to buy new arms and they didn't have the money in which to do it, they went ahead and they doubled oil prices, and that started in motion certainly the spiral that we witnessed with energy prices in the 1970s.
Right.
So when you go all the way back to the late 60s, early 1970s, and you see oil around $4 a barrel, and we've already had it to 147, which I believe we're probably going to see that price level challenged within the next year and very possibly exceeded. I think looking at where gas prices are now, I think there's the possibility they could go a lot higher, Joyce.
Yeah, I agree with that. And so from a financial standpoint, I use it as an opportunity to maybe put some investment dollars in those particular companies that will benefit from higher oil prices, so I can at least offset some of my expenses with hopefully a profit in my investment side.
Well, I've always been an advocate. You buy the quality, you buy it when it's under-owned, misunderstood, and undervalued. And I think when you talk about the energy sector, even though they've had a very nice run here, certainly over the last 2 years, I think they have more potential to move significantly higher. But I think when you talk about the energy sector, I think if you look at the quality companies, certainly the good dividend-paying stocks, the low PE companies, you want to own a combination of oil and natural gas. I think that's the best way to approach the energy sector.
Yeah, I would agree with you in that as well. I want to thank Joseph Meyer for his views on this wonderful topic today, and thank you for listening in with us. I hope you've enjoyed this interview, which is one of a 4-part series covering jobs, housing, the future of gasoline prices, and of course, the stock market. As a thank you, Joseph Meyer is offering a 3-month trial on his fabulous newsletter, Straight Money Analysis, where you'll get additional insights on hot topics just like the ones we've covered here today. This is over a $50 value and yours free when you purchase a copy of the international bestseller Own the Clouds from Amazon.com in either paperback or the Kindle version. You can check out his offer and over 90 other bonus gifts from the website www.owntheclouds.com. Again, that's www.owntheclouds.com. Thank you again for joining us. If you have any questions, please feel free to send us an email. You can do that through me directly at joyce@blonsky.com. And I'll spell that for those that are challenged by my last name, because there is a J at the beginning of Joyce and a J at the end of Blonsky. So it's JOYCE @Blonsky, BLONSKIJ.com. Thank you again for joining us, and I'll hope to see you on our other 3 interviews shortly. Joyce Blonsky, recognized by industry peers as an experienced financial advisor and 5-star wealth manager.